it was one of those things that really hit me, and I said, why would you not do that? Like, if you understood that, right? Because who would you want to build the most wealth with? Your family, right? And so this is a context of where you could do that and have a little bit more control.
Welcome to Investing for Generational Wealth. I'm your host, John Lai from Cloud Capital, where we help high earners like yourselves invest outside of the stock market to passively achieve long-term wealth generation through superior risk-adjusted returns, long-term passive income or cash flow, and tax benefits. And we'll talk about some of those tax benefits later. And together with investors, we're renovating over 900 apartments and building over 500 single-family rental homes, as well as starting an alternative investing portfolio as well. And before we begin, just like always, a quick disclaimer: we're not financial advisors. All investments are subject to risks, including the possible loss of your money. So invest with consultation from your CPA, your attorney, whomever that might be, before making any investments. Okay, so I'm your host, John Lai again, and welcome to today's episode, Alternative Cash Options for Passive Income and how that can be used to create generational wealth. And I love that topic because we're all about generational wealth. In fact, we have a podcast called Investing for Generational Wealth, so it's right on point. And today's guest is Tom Suvansri. Tom is a founder of Perennial Pride, definitely dedicates himself to helping families, professionals, and businesses gain true financial independence. Tom started because he witnesses parents lose a lot of their hard-earned income and wage and wealth due to really, financial literacy. So he inspired others and as well as himself to really learn about how to gain that financial freedom through innovative strategies and practicing control strategies, such as strategies to generate that generational wealth. So Tom, a little bit of background on you, but could you tell us a little bit more about what you are doing and how you came to where you are today?
Yeah. So thanks for having me on here. I'm really was looking forward to it. Yeah, it's this it's a long journey when you talk about generational wealth, and as I get older, that means a heck of a lot more to me than it used to when I was in my 20s. So I talk to my kids about it, and they don't get it, obviously. Um, but yeah, so unfortunately, watching my parents sort of struggle financially, and we never talked about, just like a lot of families never talk about these things. It's such a taboo topic, which is just insane to me. But this is the way our lives are. Yeah, and so through the course of that, it really drove me to sort of learn more and take ownership, and that's why it's great for folks who are listening here today. You're spending time learning, right, and getting educated so you can carve that path instead of just listening to financial advisors tell you what to do, which is what I didn't like as I was sort of building my wealth, working my job. And I realized that they were very cookie cutter. There was a pretty typical sort of advice. And so as I started learning unique strategies, and you get those things like, what are the wealthy doing? Well, I started learning that. First thing, just like John, we were talking about before we got on, real estate, right? Real estate was a big thing, alternative investments, getting into business. And so as I was working my job, I started learning those things along the way, just like I suspect folks maybe listening to this today or watching are also doing. And so I learned that along the way, and I started building enough wealth, and I started recognizing unique strategies that my advisors would never ever entertain or share with me. Even my CPAs weren't sharing with me, tax strategy. And so as I built this up, and I was able to have someone to talk to you, John, before, like I was able to extract myself from my job. I call myself a little refugee from my job, and to build enough wealth and passive income. And I want to share this with more people. The things I was fortunate enough to come across, even just basic things of where to store money and save. Like these are basic concepts, but we can always lose sight of alternatives if we just kind of stay in our lane. So today I get to work with business owners, high net worth folks, and helping them to see things outside of what the typical advisors in the financial world will tell you, and empower them to take it on themselves, right? I'm not here to tell people what to do. I'm there to help educate, just like you're doing on your shows and your podcasts, so they can, own their own financial lives and dictate their lives going forward. So that's what I love doing it, and it's something I've been called to do now.
That's great. That's wonderful. How did you take that first step? Because that first initial step is the hardest one because you can either learn from others, but then you get into like the problem of analysis paralysis. So how did you take that first step and then the next step and then really take action?
It's funny because I would imagine maybe you did this too, and maybe folks listening kind of like you come across books and you're reading, it's easier, it's a more passive thing. I don't have to, meet anybody. So you start learning. And I remember reading like Rich Dad Poor Dad. I said, this is interesting, kind of makes sense. And just like a lot of people, did nothing with it, right? Just let it sit. And then after 2008 crash, I said, oh, okay, I need to do something else. So I revisited that and I started reading that. And then I started reading more and sort of just getting educated. And, I think a lot of things really started turning a corner when I had the courage to just kind of start interacting with other real estate investors, right? Because I went to real estate investor meetups. I went on, Bigger Pockets was kind of new at the time. So I was kind of engaging a lot of folks from across the country, and my education really expanded from there. But I still remember the day when I first met my kind of first partner in a real estate investor meetup, which I almost, John, did not walk in because I was walking in and I'm like, ugh, these guys know everything. I don't know anything. I'm gonna look stupid, right? And I just said, screw it, just go in. What's the worst could happen? And it was a disaster. I didn't meet anybody. It was kind of everyone else was clueless, just like I was. And but then I was leaving, I caught eyes with a guy, and I said, "Hey, how you doing?" And we started talking. And then a couple of hours later, we were still talking. We got to know each other real well, and he was a seasoned investor. He had bought maybe 35 rental properties in the area after the 2008 crash. Like he picked up a lot, and I helped, and I realized what he needed was capital. So I just started loaning him money, working with him, and that kind of spiraled me down the road of learning and experiencing it. So what I would encourage everyone, and this is just a basic thing, I mean, just in life in general, like the courage to take, right? And it's a funny thing, and this is what I love about what you guys are doing. Um, I heard this quote the other day, and it was like, the opposite of courage is not fear, it's conformity, and that we want to stay in our lane. So we got to get out of the lane if we want to expand and grow and, be all we can be.
Yeah, that's great. I have to admit, like I went to those meetups, I met people, and even then it took a good like 2, 3 years before I just sat through presentation after presentation and started taking action. Met my first partner. We were focusing on residential. It didn't really work out, but at least I took the next step, the first step, right? And so I'm glad that you were able to tell that same story and that you were able to do the same thing. So I encourage everyone, do go and meet people, either whether it's a meetup. We have monthly virtual meetups now, but definitely do take that first step, introduce yourself. It's okay if you don't know much about real estate. Start with residential, but I would definitely, and we can get into this, talk about commercial real estate, right? What did you invest in initially, and then how has that evolved over time?
Yeah, it's a good question. Yeah, it's interesting. So this was probably 10 plus years ago, and I started with like the private lending, and then I got a fixer upper, like it was a short sale property that renovated and went through the process and got it, rented it out and refied it out, the BRRRR strategy, all that stuff that I'm sure your listeners know about. And it all worked out that really well. But I realized what I don't like about, that space. I didn't like the construction work and all the, repair. It just didn't fit me. I'm not a big hands-on guy. I'm a more conceptual guy, thinker. And it just wasn't my cup of tea, but it was good to learn it and sort of see how it was done. And the guy that I originally started partnering with, he helped me along the way, gave me some pointers, and he was always there to help me. But it was really a great experience. And so I started just building my single family sort of portfolio over time, like a couple houses a year, and I ended up with over a dozen properties. And I was just saying, wow, this is a lot to manage, right? Even though I wasn't managing all of them, right? So wasn't so passive anymore. It didn't feel like passive, even though my tax accountant told me it's passive income. I said, well, do you see me how many hours I got to spend here? How come I can't use it against my active income? So he said, no, it's passive. So I started over time, and I still own a good chunk of them. Actually, I'm selling the first one that I did buy. Like this, literally, we're closing next week, and it's been over 10 years. So amazing journey along the way. But and then I shifted into spaces like you're doing, like syndications, going to multifamily, did some stuff around mobile park. So I've started shifting more into finding good operators who know what the heck they're doing and can, be part of a limited partnership, structure, like, and take advantage of that without kind of being at the forefront of it. Right. So that's kind of where a lot of, at least for a portion of my assets as I moved into real estate, kind of shifted and done things like mobile home parks and self-storage, things that, so I've diversified a little bit in that space, but primarily in syndication work.
Yeah, that's great. So was it primarily LP, or did you ever get to become part of a GP?
No, I limited to limited partner at the time. And at the time I was still working a job, right? And so I had all my rentals, I was investing in other things. And so I said this was probably my space to be limited and try to find the right partners, which unfortunately, you go through these sorts of lessons, and I learned where there's some bad partners and lost money along the way for sure. So, that due diligence, I mean, some of that stuff you kind of just have to pay for that experience. That's kind of how I tell myself so I can sleep. Um, some of them I had some losses and pains, but certainly over the years I've gotten better at it to be, more due diligent around who I'm partnering with, and stop getting all googly eyed with the returns that they're showing. Look at the people and the operators, their track record, all the stuff that I'm sure you got to look at, and just make sure you're getting in with the right people.
Yeah, and that you make a great point, which is when you go and invest, it's not just underwriting the deal, right, and making sure that it makes sense. You have to make sure that the partner you're participating in and with, whether it's a GP with a sponsor, like you're doing due diligence on them as much as you're doing that on the deal itself. And so we did definitely take that to heart on all the deals that we do. If there's any indication that there's something awry, there's plenty of sponsors out there.
Yeah.
Just go on to the next deal, go on to the next partner. So I definitely take that to heart. How has that changed? So is it primarily commercial? How did you find your buy box? Is it a particular asset class?
Yeah, I mean, multifamily was always, made more sense to me as things wore on, just because you kind of experience, and again, I may not have gotten there if I didn't experience the single family space, right? Because obviously, the risk of that was higher when tenant goes out. Now I'm stuck, or they, I have to evict people. I mean, it's completely empty. So I recognize that multifamily made a lot more sense, and everyone's going to need a place to live, and nowadays it's like we're probably moving into a rental sort of marketplace anyway. Like it just made more sense to me. And and then the other one, which I've started to go a little bit more into, which I find fascinating, is we like stuff in this country, right? So, and some people can't part ways with it, so they got to store it somewhere. So I like that space because it's just logical to me, right? We need space, and people are downsizing, right? Whether they're baby boomers and they downsize their home, they have stuff, and that market I believe is growing because we just have stuff to store. We like things. So that's kind of in my space, but I've migrated to certainly other areas like crypto and other spaces. Like I've just gotten interested in some of them, but real estate still comprises a big chunk of my asset portfolio.
Yeah, yeah. And I think it was unspoken, but like self-storage is what you were referring to, right? Like
Yeah.
self-storage. Yeah. Yeah, we're bullish on self-storage as well. Having taken a look at a few, But they all go through their own market cycles, right? Whether it's, obviously COVID, commercial office got hit quite a bit. Syndications, multifamily, because of interest rates, interest rates insurance did quite a number on multifamily syndications, especially those who didn't really lock in those fixed rates and had those rates float. It was difficult for some of the syndigators in that space. What are you seeing in market now? And, especially with the new administration, granted, they're very bullish on, real estate in general, with Trump coming into that space. But what do you, I don't want you to make predictions per se, but like, what would you say for the next half year or so?
It's interesting, and the things I'm seeing, and I wouldn't say I'm an expert in this space, but I do listen to a lot of people talk about it, and it's quite fascinating. And what I think about, and probably people feel this because you see that, like here, my single family home has 10 offers immediately because there's no inventory
Right.
in my market, right? And you kind of say, wow, this is crazy. People are keeping their fixed rates, right, really low. They don't want to sell. And it's kind of distorted the market, right? And here we are, their inflation's coming down a little bit. They start, easing things by lowering rates, but what happens on the long end? It goes up, right? People are worried about inflation here, and I think that's unfortunately, I feel that inflation is going to be around longer than most people would care to want to admit. But that feels like it's going to get sticky. I look at my barber, like I feel like I'm going to pay $100 haircuts in the next week or two. I'm like, and this guy's never going to drop his rates. I look at that, but imagine the broader market. So I think and what I'm hearing too is that because there's such a long cycle, you guys know this better than me, like cycle to build these things, right? They take time for permitting, construction, all that stuff that there's not a lot of stuff in the pipeline, right? After things get put in place. So I can imagine in the not so distant future, in a couple of years, like there's going to be the ones that are actually coming out are going to be hugely in demand, in my mind. Like they're going to be well positioned based on what I see. Now, again, I'm not as close to it, and it isn't like I'm an operator in that space, but those are the things that I'm hearing and seeing from people that I think know better and are actively in this market.
Yeah.
What do you see, John? What's on from your perspective?
Yeah, I think so. It's interesting that the new administration coming in, right? They're very bullish on real estate. They're very bullish on reducing taxes, and so as much as the cost segregation is being phased out over time, you would imagine something like that, and maybe not necessarily a replacement for cost seg, but those tax strategies will come back, right? The new administration will probably introduce something like that would be favorable from a tax code perspective to real estate developers as well as investors. And so that all is coming back. So with that kind of in mind, but not necessarily depending on that, I agree with you. Like interest rates will continue to be potentially an issue as much as like the Fed is trying to depress the interest rates or keep it in check, right? Rising cost of almost everything will continue to be a burden for the next foreseeable 6 months to a year. And as much as I think the incoming administration wants to keep that in check, they don't really have, they're probably not going to have, I can't say that for sure, they're probably not going to have that much power over the Fed, right? Mm-hmm. And the Fed is going to remain independent. And so they're going to do its thing. They're going to see how the market's doing. I think that those two factors, and then if insurance is kept in check, I think we'll continue to have a relatively healthy real estate market. You're right that there's going to be I wouldn't say a surplus. There will be more inventory coming to market. There certainly is not from a builder's index perspective, we're not building enough. So rental property will continue to be demanded, right? And so I think in some markets there's going to be a reality check where the rent prices are going to be I wouldn't say depressed, but we're not going to see the rent increases in the last 2, 3 years that we've seen. So I think with that in mind, I think multifamily still makes sense. We're investing in, and we can get into this, but we're investing in alternative assets outside of or adjacent to real estate. So you talked about
Hmm.
self-storage, this is one of those. Debt income funds, right? Make a lot of sense because people, as much as maybe they're not building as much, there are still a lot of people that are fixing and flipping, right? And so like those debt income funds, those funds that invest in bridge loans will
Hmm.
still do well. And then with increasing interest rates, it's paradoxical. You would think that it wouldn't increase all that much, that margin that they are able to extract wouldn't increase all that much. In fact, you would think that it would be depressive for them, but they're actually doing well because uh, those people who require the bridge loans still require the bridge loans. And no matter like if they were able to go to the bank, they would, but they're not. So if interest rates increase, I think it would only be beneficial to those funds. So we're
Yeah,
investing in some of those and
yeah,
then
that makes
investing in others
sense.
as well.
Yeah, that makes a lot of sense. And and banks will tighten up, right? They get a little nervous around these things, right? And they were, you see it with the how the rates went. Some of them sort of ran into trouble because they're upside down, right? In terms of the bet, right? The long run versus short run. And so it is interesting. But and you probably see this too. When debt was so cheap and we had actually real rates are higher like than debt, like it was like free money, right? Everyone was loving it. And unfortunately, what happens with that, people make some bad investments. And so hopefully you're with the right partners and people, which is what I'm looking for, that can take advantage of that, right? They're well capitalized. They are have the right connections and relationships. You know just as well as I do how important that is. You're in the front line to hear about things before they kind of make their way out to the broader community, and they're ready to pounce. And so unfortunately, I see pain, but then if you're with the right people and your eyes open, I think there is going to be opportunity, right?
Yeah, yeah. And if you have the cash at the ready, right? Because you could see the market like harbingers, with interest rates and with syndicators maybe having some issues. But if you don't have any cash, then you can't act on it, right? So you have to have the cash at the ready in order to pounce on any opportunities like that.
I love that. And I know, when we started this webinar, we was talking about cash, and cash is kind of a boring topic, but to me, I harp on people all the time the importance of having that. And they're like, well, cash is especially now you can actually earn something from a lot, most times you can't, right? It haven't been, right? They give you your point, especially at the bank, your 0.001% and you walk away. I'm like, it's insulting, right? Right? You just basically give them a free loan, right? And they get to use our money. Uh, so finding better alternatives long run for cash is also a place that I stumbled across, and you're ready to use it, and it's productive while you wait for opportunities like this. And it's not at your local bank, right? Banks are good for transactions, right? That's what they're really good at. They're good for transactions. And when you want a loan, then you got to, hand over, your left arm, your right arm, and expose yourself, right? It's under their terms, right? I hated that, right? And now they might not even give it to you, right? They have that choice. They have that choice and power. And so there was a time I came across this concept, and I said, this can't be true. And it was a book called Becoming Your Own Banker. Someone gave this to me. And I said, what is this thing? I started reading it, and I literally had to read it 3 times in a row. It's a short book, but I had to read it 3 times because I said, this can't be real. It doesn't make sense. How come no one's ever told me? I had an insurance broker who was working with me at the time. He didn't know anything about this, right? But it was just using a different way to store cash, right? That had other benefits and has a financing arm, just like a HELOC would in a home, has the same function, but it's something you can control. So I learned about that, and I had life insurance for a long time and never used it, just cash piling up on the side. So it's been a fascinating journey to go through that when I coupled that with real estate. That's what happened. That's what helped me propel my wealth.
Got it. Okay. So that when you hear about infinite banking, that's what that refers to, right? Like
Yeah,
life insurance. Yep.
yeah, it's just taking a different the concept is pretty basic when you really boil it down, and there's so many parallels to real estate. Like they're almost mirror images in terms of how they function as an asset. But, when you think about the main concept is we finance, this is Nelson Nash says this, we finance everything in life, whether we pay cash or we borrow someone else's money. If we borrow, clear financing charges. If we pay cash, we give up the use of that money now, right? It stops working. When we're sitting in a bank earning 0.001%, nobody really cares, right? Right. But if it's earning 3, 4, 5% somewhere, then you got to wrestle with that, right? Is it better used somewhere else? And so this is the concept of storing money in just a different financial institution. It's not a bank. It's actually a life insurance company, which on paper, the ones we work that I work with, they're like 150 years old and they've been around longer than a lot of banks and they rarely fail, right? They're a much more stable environment than banks because they can't over leverage out their money, right? Because they need it to pay claims. So they're much more regulated and stable. And that's why you don't hear them collapsing all as much, right? Because they need to hold a lot of cash available, right? And so with the course of designing these things, you have to know how to design them, the plain boring policies, which like a Dave Ramsey will bitch slap all day long. Like, right? Says they're the worst investment. And I actually agree with him on that because it's not an investment. It's the storage bin, right? It just so happens to protect what I would call our best asset, which is us, right? And our ability to earn, right? And think and create, right? That's our number one asset, but we don't want to protect it, right? That's our biggest asset, especially we have families and people. So anyway, we use it in that vein and it can earn and it's very tax advantaged. So it's a very powerful tool if understood, but again, for the storage, protection, some tax benefits, and then and the wrinkle to it is you can borrow the life insurance money and use your cash as collateral, which is kind of like a HELOC, right? It's just that they don't say no, they can't say no. There's no credit check, there's no application, there's no yes or no. It's say, can I have my money? Yes. What are you going to use it for? They don't ask you that. You use it for whatever you want, and then you pay it back on your terms when you want. There's an interest rate because it's a loan, but your cash inside the policy, like an equity home, continues to grow undisturbed. And so that's it in a nutshell. When people, real estate investors get it, they love it. It just takes a little while to build, right? Just like you're building your own business and bank, it takes some time. That's the challenge, right? And some people can't get around that.
Yeah. Yeah. And with the concept of insurance as they think of it as health insurance, right? Not necessarily HSA, which is almost like an investment, but like traditional health insurance. It's you put it in, it's there if needed, but you don't really use it as an investment, right? The investment.
Right. You don't think of it as an asset, just like you're like going to the house side of it, your property and casualty, right? You want to protect your house. I mean, people have would you ever protect half your house? Oh, no way. That would be impossible. Like I wouldn't do that. And then, someone's making $500,000 and they have two times their income. Well, they're worth maybe, 30 times their income. You're protecting like 10% of your life or something. I'm like, you never really think about it because we're trying to make it as cheap as possible, right? And that's what we've been trained to think, right? So it's just trying to shift it and think longer term. And it's, a lot of the folks, when you think about from generational wealth, where I first encountered it, outside of becoming your own banker, it was one of the core pieces of the Rockefeller family. If you ever kind of follow their story of their family, obviously they were big business owners. They owned banks, right? They were, big real estate type folks. But what they did, they built a family office where they had people working for them, right? Their own CPAs, insurance, and investments to work for them. Not most people can't afford that, but they had them in-house. And one of the core elements of what they had was whenever anybody was born into the family, they put a policy on them from day one because they were the youngest, the healthiest, and they could use it build up over long periods of time. And that was one piece of the broader puzzle the family used together, right? So they had a pool of cash that they were managing, and they use it to finance their business or investments through their family entity. And I encourage people to think about that. Like that's what I do with my family. Like I didn't just fund my kids' education. I made them realize that this isn't our money that we're investing in you. Now, if you had a great business idea, I would also invest in you, but you got to borrow my money, not someone else's money, right? Because now you're beholden to them. What if you maintained it within the family world and you build wealth together? It's a, it was one of those things that really hit me, and I said, why would you not do that? Like if you understood that, right? Because who would you want to build the most wealth with? Your family, right? And so this is a context of where you could do that and have a little bit more control.
Okay. I like that. I like that concept.
Yeah, yeah.
Um, you started with private lending. Do you still do that today? And is it like
Yeah, I
do
do.
I do some of that, and
Yeah,
it's
yeah.
been pretty lucrative. Now we can talk about the tax sheltering side as well, but like private lending, talk a little bit about that.
Yeah. To me, when I first started meeting a lot of real estate investors in general, as you get to know people and get to see kind of how they think about business and how it was where I initially started with that, and I started meeting more investors who I trusted in their model. They were proven to do well, and I was just playing the bank in that side of it, right? And I kind of was collateralizing their assets, or they had personal guarantees, and I kind of knew a lot of what their financial world looked like, and so I had more confidence, just like a bank would, right? You kind of have to take an underwriting approach that way, like what kind of risk am I getting in with this individual? What if this guy actually dies? Am I ever going to get paid? Like, so they have to think about, kind of real things like that. But, I got very comfortable with it because we had legal documents set up, right? I had assets I could secure if needed, right? To get if things went haywire. And a lot of my best loans have all been with these small private people, right? It's kind of, and to me, that's why I love it. And I actually just use my money from my life insurance policy. I take their money and loan it out to other people, right? So you just kind of arbitrage that way, right? I take it from 5% and I loan it for 12. That's more than 100% return, like off of someone else's money. So if you can kind of think of it that way. So it's been a really one of the more stable areas because I got to really know the people and what they're doing. So, but it takes some time. It's active.
Do you have a fund, or do you do a lot of your own investing of your own money?
Yeah, I mean, a lot of it, it's through, obviously my personal real estate stuff that I still have a good chunk of it, and my wife's telling me all the time, "Can you get rid of that?" It takes a lot of energy. Yeah, and a lot of stuff I invested in a lot of other different operators, and I have trusted people, and I'm part of a family office in my own practice. Like I'm part of a family office model. So we can get access to certain unique investments here and there. I'm not so much in the public markets so much. I've started to, minimize what I have there. Not to say it's a bad place. I think it makes sense to have some money there, um, especially if you're getting started, right? Because you may not be able to get into like a syndication like yours or real, might be you need to build up some money. But primarily it's through my partner bases and some of the different groups around the country I have connections with. And I'm primarily in a private space for the most part.
Yeah, that's great. That's great. Like when I look at the rich or ultra wealthy and the percentage and the makeup of their portfolio,
Hmm.
I mean, it's obviously like some in the public markets, equities, debts, but a large majority is in real estate, and then all these other type of private equity instruments, right?
Yeah,
And
yeah.
so that's, I think that in businesses, obviously, but that's the difference between like the ultra high worth and the wealthy, and then like everyone else is like how much they've invested outside of the public markets.
Yeah, it's amazing. And as I've gotten around some, um, more even wealthier folks, like, a lot of stuff that is trained on us that this is where we go invest. It's actually where they preserve their wealth. It isn't where they build it, right? And so they're building businesses, creating, expanding, and that's where their, for lack of a better term, superpower is. And it's really thought, and really have struck with me because, when you're growing up, like they say, go invest in these places, but I forget, like you need to invest in yourself, your skills, your relationships, and spend money there. Like we don't, I often didn't do that, like unless I was forced to do it, right, through the company or something. And so I said, you got to invest in like going to, conferences and going meeting people and building up skills because that will probably build you way more wealth than an S&P 500 or something. Like it's just light years away, right? And so they're using those things as like their preservation. It's not really meant to grow all that much because it's barely keeping up with the debasement of our currency, like barely. And for most of it's not.
Yeah, well, and especially the next, what, call it 5, 10 years, right? You hear like the CEOs of banks saying, what we saw in the broader markets, equity markets, you're not going to see that. You're not going to see the 20, 25% growth, right? That we saw in the last 5, 10 years. There's none of that that's going into the next 5, 10 years. Now, with the new administration, who knows? But yeah,
Who knows? Yeah, it's hard to know, but yeah, yeah. Even like folks like Goldman Sachs, they're thinking single digits, and it's just, if you look at the P ratios, all the metrics that are all, again, all distorted, right? Like a Nvidia, like saw a crazy number. Nvidia was like worth like more than Canada's GDP. Like certain countries, like this is one company is worth more. Like and it just all distorted, like 60 times earnings. Like that doesn't make any sense. Average is like 12 or 15 or something. So it's just irrational, let's just say.
yes, 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 yes. What do you invest now? So obviously you're using a lot of the infinite banking concepts to use the capital.
Yeah, yeah.
You have availability to private equity, and that's probably where you're investing the most. I'm also thinking about like tax reduction. Like a lot of
Yes, yes.
our audience, a lot of the people,
Yes, yes.
your circles, high net worth, as well as like just high income earners. Um, Traditional, W-2 individuals have high capital gains, marginal tax rates,
Yes.
yes, but they're not really thinking, or maybe they don't have available to them those instruments that can reduce those taxes. So what are some strategies that you've come across?
Yeah, so some of the stuff I also, and we know there's a chance of some people are exaggerating, I think, but it's clickbait. It's interesting, like these commodities, super cycles and all these things. But I do oil and gas investments that have some sizable tax advantages. As long as you can get your CPA on board, because sometimes they don't even understand it. They know the code. I can cite the codes now because I'm kind of way, but because I've had to convince them this is how you report it. Right? Because can sometimes it's complicated. So don't tell me I don't bash them. I think they're good people. They just the tax code's gotten way too complicated for anyone to completely understand, right? Which is crazy. But we have to, as investors and stewards of our money, have to be mindful of it. And don't always rely on your CPA because I've come across more of them that don't know these things, right?
Yes, yeah, and traditionally, like I started my career as a CPA.
Oh, you did? Oh, okay.
Yeah, and so traditionally we're taught, be conservative as
Yeah,
possible,
yeah,
right?
yeah, yeah,
You want
yeah.
to minimize risk, minimize taxes. So I mean, I completely understand their perspective.
Yeah, I don't, yeah, I trust me, I'm not bashing. They do good work and I think they're overworked for what they paid. Um, Anyway, so yeah, so oil and gas, and a lot of it, the book I would actually recommend folks to read if you ever have a chance. I don't know if you guys are fans of like Tom Wheelwright. Like he does some great work. There's a book called Seven Investments the Government will pay you to make, right? And he talks about these things, and some of them are like real estate and businesses, oil and gas, right? He talks about life insurance, like so. He talks about these sorts of things, investments. So, that's a good guide to kind of get a feel, but you got to learn about those things, right? And this is people always ask me all the time, where do you invest? I said, well, what do you know, right? Who do you know? Right? I think that's way more important and try to stay in your lane because I've personally made mistakes when I just kind of jumped at things and without really knowing it enough. But oil and gas is a good spot, and there are a host of interesting sort of tax strategies out there that in the space of solar and maybe in your world in California, like investing in solar kind of businesses. Right. You can almost I almost equate them to rental properties, right? You own a rental property, it kicks off cash flow, you get appreciation and some tax benefits from it, right? It has kind of a lot of different benefits to it. You can actually own a solar project, right? Where you become the owner of that and you get the solar credits, the depreciation on the asset, and some cash flow, right? And so you can play those sorts of things as a high W-2. Obviously, if you're a high W-2, there are limits, right, of what you can do. Um, there's things like there are leverage deduction, like people, the government likes us to donate. I know things like conservation easements have gotten very big into, now pretty much stopped because of the abuse of bad players. And this is always what happens, right? When something's good, people abuse it. So it got abused, but there are some legitimate leverage deduction plays, but you got to look at the operators again and understand what they're getting into. Like there's some in the medical space. There's a lot of orphaned type of devices and things that never really got far along, but they're viable. And so you can potentially invest in them and then donate them to hospitals, other places, and get a big deduction from it. So those are also there is viable. So you got to you got to get creative. And there are a lot of them out there, but again, this is where you got to get around people who are more creative and are more expansive thinkers because they say W-2s don't have, but there are. For business owners, there are way more in terms of things to consider. I just even recently I got across. I'm in Connecticut, and and you see it like even this company who's they own a film production company, and they can get credits because the state will give them credits for filming there in certain states. California has that. It's like so. There's a lot of ways if you can just recognize how the government is trying to incent us to do things. There's a lot of options there, but you got to talk to the right people. And unfortunately, your CPA may not know about
Yes,
these
yeah,
things.
that's funny. Yeah, I was talking to a self-directed IRA company, and this representative was referred to me, and he was saying, obviously, self-directed IRAs, tax efficient, right? But he was saying there's a movie production company or like movie production businesses where you
Hmm.
can do exactly what you just said, right? And so like there's all these different types of opportunities out there. That's pretty interesting, pretty amazing. But oil and gas, coming back to that, and we'll have a webinar on oil and gas in a couple of weeks. Fantastic. If you investigate and go with the right, operator, obviously, but fantastic tax benefits if you're a high earner, W-2 earner, right? If you invest in the working capital side of oil and
Yeah,
gas,
yeah.
working interest side of oil and gas, definitely, that's something that I'm going to invest in as well. I'm going to invest more of my money in. Just because high W-2 earners, you have to shelter your taxes legally, and this is something that the government allows you to do. So that's great.
That's exactly it. And that's into your just like anything we've been talking about, the common thread around it is know what the heck you're investing in, right? And the second part, obviously, which I always stress with people, don't let the tax tail wag the dog concept, right? It's got to be a good investment, right? And then, yeah, it'd be nice to have the tax benefits on top of it. But once you're only in it for the taxes, the IRS doesn't look too well on those things when you're just trying to shave taxes. They have a place for that for people like that, right? And it's you get three square meals, but you may not have a lot of freedom.
What would you say? Like we have a lot of folks, obviously, in the tech industry, and you come from pharma. They're not very knowledgeable about real estate or insurance or really like taxation, oil and gas, alternative investments. What's the first step you would advise them, consult them to do?
Yeah, it's interesting. I always have like to me, I think we can jump so quickly into the investing world fast, right? And that's what we do. We get a job and they're like, what do they give you first thing? Here's your health benefits and 401k, go invest. Not really much education around that, right? And we don't get educated. And I almost, for some folks that I've kind of come across, on paper, everything looks good, great salaries, great, seems like assets, but they have no liquidity, nothing, like their foundations are pretty broken, right? And it just takes one or two bad things and this thing will fall apart. And I said, this is a time to really, for people who are trying to take ownership, to go get someone to just take a look at the foundational pieces, right, of what you're doing and then build up because it's just like a house. Like you would never build a house on a bad foundation, right? But unfortunately, they push us into this world to invest before people are actually even ready or know what to invest in, right? So it does to me it's basic, getting educated and forcing yourself to kind of learn some of the basics and getting help from advisors. I mean, I've never really been that's why I moved into this space because I didn't like the way it works because they don't teach you those things, right? They don't teach you. They jump you to buy something, right? And I said, this is where the foundational piece really needs to be solidified so people understand it. Cash flow management, right? Debt management, right? All those very basic concepts. Unfortunately, people don't learn them. And I've had clients with $1 million coming in, they couldn't come up with $25,000 if you asked them, right? And you might have clients who and people listening that just make that kind of money, but it's just mismanaged and the foundation is broken. Um, and what, God forbid, anyone gets a disability, die, or whatever, lose a job, like things can fall apart very quickly. Um, so I would really encourage people just to kind of almost go backwards a little bit and get educated, right, before jumping into any investment and, be careful about that. Uh, I always heard that Warren Buffett one, and where he said it'd be great if we had a ticket that said you can only invest in these, X number of things over your lifetime. Because if you did that, then you'd take a lot of care in what you invested in, right? Because you couldn't move. We get so enamored with things and start throwing things at stuff. I mean, I'm guilty of it over my history. I've gotten better at it, but taking the time and sort of being measured about it, I think it's very prudent.
Yeah. What do you think? And I have my feelings about this, but what do you think about going with like a registered investment advisor, like an RIA, or like versus trying to learn yourself, right? There's a lot of, there's a lot to be said about learning things yourself, and probably a lot of, tech professionals that are in the audience today do that. Like, we're educated, right? And we often try to learn about the investments, the investment world, or maybe outside of the investment world ourselves. Or God
Yeah,
forbid,
yeah.
go to like Reddit or something else. But like, how about relying on a professional to do this, an RIA?
This is a tricky one because this is where I see them from both sides of it. I know enough where it's such a disjointed world in terms of how people become like when they set up an IRA or RIA, where they focus can be very limited. And that's kind of what I see, right? There's not a whole lot of holistic sort of planning or thought. It's very structured in there. So, trying to go talk with folks who maybe have a broader lens to it, I think is what's key. And that's where you have to ask them those types of questions, right? Where do they invest, right? How do they sort of see their sort of financial world for themselves and kind of do you eat your own cooking? Right? And kind of get a sense of how broad they are. Are they talking about taxes, which is our biggest expense in our lifetime? how could they not, if you're a fiduciary, at least have an idea around it or connections to good tax professionals, right? So, it's really asking those sort of really important questions to kind of get a sense of how broad do they think about it. Because just like any industry, right? And I think of this in medical field. My family is from the medical field, and there's a lot of average doctors that never stay on top of things and are very sort of kind of comfortable. Well, I think a good advisor who's proactive, like, can be a really good asset to kind of get people up to speed. But it will never, in my mind, replace your need to go out and sort of also explore, right? You take their information as a piece of the puzzle to help you shape your own financial world, right? I think that's the best approach. And, you probably get a good sense of where people come from when you start talking to them because most of them are pretty much set in their ways in a lot of ways, for good or bad. I'm not judging them but you're going to get limited information. So you need to sort of take it from maybe multiple sources.
Yeah, I like that. Thank you for that perspective. That's fantastic. We are close to being at the top of the hour. If you have a question for Tom, feel free to drop that in. Otherwise, Tom, how do you give back to your community?
Sorry, I missed that question.
Oh, how do you give back in your like free time, the free time you do have? How do you give back to your community?
Yeah. The one thing I do love, I'm a big pet lover. We rescued, two dogs and there's a Project Precious Rescue in our area that we partner with. We help them fundraise. We, obviously donate a lot of money to them. um, Buy a lot of swag, but no, to me, it's just always heartwarming because it's fulfilled so much in our family, and so we give back. And I sit on our homeowners association board to kind of connect with our community and sort of help them in wherever way we can. Um, and we actually just really started to start spreading out we started thinking about getting like a small little foundation together, a family one, right? That, we're starting to figure out like how can we direct some of our wealth to things that matter to us because, I kind of realized over my time, I always wanted to be charitable. But you sometimes feel like you can't because, you need to build wealth and right. And you're pressured in that world. And, it's like I encourage my kids to always try to do it early because it becomes more of a habit. Like I build it. I have built a habit of like storing money, investing and kind of hoarding it to some degree. And so we started talking about that. I said, I can't take this money with me. Although I'd love to. I can't when I pass or graduate. I call it graduation. I graduate from this earth. I don't like to get all negative. Um, but how can we give it to things that matter to us that make some difference in our lives? So we're starting to figure out where that is, and make it a little bit more part of our lives versus kind of like a secondary thought.
Yes, and that's a fantastic perspective. I mean, especially coming from like even a family of medical professionals. Like I came from that same family, but like them growing up, they came from having very little, right? And so their mental model was, let's earn, but let's be frugal in whatever we do. And so growing
Yeah.
up, that was always the mentality: be frugal. And then now, like building up at least a small war chest, like what do you, as you say, you can't take it with you. Like you can leave some to your family, but like you have to give back to your community. So I'm happy to hear that you have that in your community as well. That's
Yeah.
great.
Yeah. And I always say that thing that's rung true in something simple. When I'm feeling down, someone told me this once, said, just go help somebody. You're going to feel much better. And it works every single time. Like when I have a bad day, I just try to do something, even just buying someone a coffee or something. I just feel better because, we all want to be valued. We want to contribute, right? We want to make a difference somehow in this world. We aren't here just to make money. I hope not, right? Yeah, it's just a different world. I guess what happens when you get a little bit more mature in life, a little bit.
Let's see. No questions so far, but how can people reach you if they wanted to reach you?
Oh yeah, definitely. Yeah, definitely. I have my own podcast called Perennial Pride Podcast. You can hear a little bit about that. I talk about all different topics, finance related and some just general wealth building type topics. My website certainly perennialpride.com there, and you can check out there. A lot, tons of resources there, and people can book some time if ever wanted to chat. I always give people my time to chat about anything. If I can't help you, I'm going to help find someone to help you. So yeah, that would be the best place.
Well, if no one has any more questions, I wanted to thank you for all the time and all the great insight you've been able to impart today, Tom. Again, this podcast will be made available to others through our webinar or YouTube, as well as basically any podcast platform that you listen to. So do like and subscribe in those platforms, and keep investing for generational wealth. Until next time, we'll see you next time.